Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special housing report brought to you in association with the BNZ. Today we look at figures on house prices from the Real Estate Institute of New Zealand. Now these are the most comprehensive and up-to-date figures on what's happening with house prices in New Zealand, and they've come out this morning with a significant fall in the volume of houses sold in May, down 17% from May a year ago. And house prices themselves are also falling. The median house price is down to $350,000 from a peak of $360,000 in March. The Real Estate Institute, though, remains confident. It says that despite the budget and some signs of a slowdown in the market, people are still confident about house prices. Well, I beg to differ a little. According to the Real Estate Institute's own stratified measure of house prices, which takes out the effect of moves in particular price bands, you can see that house prices are down 5% from the peak in November 2007. Once you take into account inflation of 6% over that time, you're looking at real house prices falling from the peak by 11%. Now, I said a few years back that house prices would fall 30% from their peaks. They haven't quite fallen that far, of course. I revised my forecast to a 15% fall. So we've still got another 10% to go, I reckon. But we might get there, and here's why. This chart, I think, tells you the story of not just the housing market, but the overall economy. It shows you that since 1998 or so, house prices have moved up in tandem with lending growth from the banks. Essentially, house prices were pumped up by credit from banks. But you can see that those two charts have diverged since early 1998. New Zealanders are buying and selling houses, but they're not borrowing money to do it. They're effectively pocketing the difference, and that gap at the end between those two lines shows you that New Zealanders are saving and that the housing market isn't being propped up by credit anymore. It now has to fall back on the fundamentals of affordability. And in many parts of New Zealand, particularly the very big cities, housing is unaffordable, frankly. At more than 6 to 7 times household income, house prices are still unaffordable, particularly in the large centres. And worryingly for house prices, we're seeing migration trends turning around. One of the reasons that house prices bounced up again early last year is that we had significant net migration. And that wasn't a whole bunch of people coming to New Zealand. That was fewer people leaving New Zealand to work in Australia. And we've seen a significant turnaround in those figures in the last few months. ASB, for example, are forecasting that we'll see a significant number of New Zealanders leaving to live and work in Australia in the coming months, and that will withdraw some of the demand for housing. And also lending remains weak across the board, particularly as interest rates start rising. So there we have it. House prices are falling. I think they'll fall further yet because of affordability and because how interest rates are rising and migration is falling. But we'll see. It's hard to predict where house prices go. Only I know that. I'm Bernard Hickey, bringing you a special housing report brought to you in association with the BNZ.